This podcast is solely for the attention of institutional, professional, qualified, or sophisticated investors and distributors.
Hi everyone, today we're going to talk about inflation, which is a central topic for central banks and for financial markets, and we are going to try to link it to the theme of the energy transition, since there is a lot going on lately in the energy market. Indeed, we hear more and more about greenflation, fossilflation, and even climateflation, and we'll try to define these terms clearly. So there are two people in particular among central bankers who talk a lot about this: the ECB board member Isabel Schnabel and the former governor of the Bank of England, Mark Carney. Isabel Schnabel said that we have entered a new era of energy price inflation because of three distinct but interrelated shocks. The first shock, which Schnabel calls climateflation, is linked to climate change itself. In recent months, exceptional droughts in several regions of the world have contributed to the rise in food prices. Indeed, the FAO Global Food Price Index was already at an all-time high even before Russia invaded Ukraine. The second shock, which Schnabel calls fossilflation, is linked to the very sharp increase in the price of fossil fuels. Even before the war in Ukraine, the price of oil and natural gas in Europe and Asia had risen sharply in the last month of 2021, but the war has exacerbated the price increase. In March, natural gas in Europe was worth 6 to 7 times what it was worth on average over the previous 20 years, and given the dependence of developed economies on fossil energy, in 2019, petroleum products and natural gas accounted for 85% of the energy consumed in the Eurozone. So given this dependence, there is a strong upward pressure on inflation. If we take the example of the Eurozone, headline inflation was up 5.9% year-on-year in February 2022, and energy contributed to around 60% of this inflation. Finally, the third shock, which Schnabel calls greenflation, is linked to the energy transition, which means the movement to reduce greenhouse gases emissions in the production and consumption processes. Indeed, clean technologies require extensively some metals, such as copper, lithium, cobalt, and nickel. This very sharp acceleration in demand has a very big impact on prices. In March 2022, the price of lithium had been multiplied by approximately 10 since the beginning of 2020, and by more than 4 for the price of cobalt. Here too, it is likely that this will end up pushing up the price of goods, and we can think here of the prices of electric vehicles, which contain much more of these metals than traditional vehicles. Interestingly, Mark Carney also indicates that the transition to carbon-neutral economies will exert upward pressure on inflation in the 10 coming years. This new era of energy price inflation will obviously have negative consequences for consumption. The household's energy bill will increase and the poorest households will be relatively more penalized. And as far as businesses are concerned, the most energy-intensive sectors will be more penalized. We can think of the chemical industries, foundries, and to a lesser extent to the food industry. And it is rather likely that governments will intervene to cushion the blow. On the other hand, Mark Carney indicates that if the countries that have committed to carbon neutrality keep their word, investments made in the field of energy and infrastructure will increase very sharply, from 2.5% of world GDP over the period 2016-2020 to 4.5% of world GDP in 2030, which would therefore be positive for growth and employment, and could even, according to him, push up neutral rates, that is to say, equilibrium interest rates. In the end, for central banks, the topics of climateflation, fossilflation, or greenflation are therefore central, but they remain difficult to grasp. Isabel Schnabel points out that the first two look like supply shocks, but that the third one, greenflation, is likely to come from an investment boom, that is to say, a demand shock. In theory, this is the nature of the acceleration in energy prices that determines the reaction of central banks. The problem here is that central banks in general, and the ECB in particular, could find themselves in a corner if medium-term inflation expectations rise too much, because that would force them to tighten their monetary policy regardless of the nature of the shock. Thank you for listening and talk to you soon.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.